Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Well, we have seen hedge funds and money managers in the latest week raising their bullish positions in COMEX gold whilst trimming their positions in silver in the latest week. In fact, gold prices broke out last week over 1%, climbing back to $1,516 per ounce into the close on Friday, supported by safe haven interest driven by tensions in the Middle East. In fact, this came after the United States said it was imposing sanctions on Iran's national bank after last weekend's attack on Saudi Arabian oil facilities. Of course, oil prices last week skyrocketed over 19%, the biggest move that we've seen on oil since the start of the Gulf War in 1991. However, we did start to see the overall price action of oil decline a little bit later in the week. Oil prices easing on renewed concerns between the US and China trade war yet again. But oil futures, they did post the biggest weekly gain since January after the attack on Saudi Arabia's energy industry last weekend. And finally, of course, we had the Federal Reserve last week that cut interest rates. This was the second time this year, but they gave mixed signals on future rate cuts. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at as we head into next week. Firstly, let's move over to gold, and this really worked out perfectly in line with what we had discussed on last week's gold asset of the day, where we were looking for buy opportunities between that 1475 up towards that 1495 zone, that we were looking for dips lower over the week to be treated as buying opportunities. We were not expecting a significant correction here on gold. We were merely looking for a pullback in order to buy back lower to springboard higher by the end of the week. And yet again, we have seen exactly that. In fact, the low of last week came in at $1,483 per ounce. We didn't get any lower than that on gold last week. And then we've catapulted higher here with another classic rally on a Friday with gold breaking out to $1,516 per ounce into the close. So as you would imagine, we have been long on gold. We've been long by 3 positions, which have all moved very nicely here into the close. All of those trades protected, and we've also taken partial profits off those positions as we go into next week, which puts us in a good position here as we start to head into the final week of September. So you can see here where we have seen this rotation higher. Again, this dip lower has again triggered sellers in this market to start looking for a further breakdown in price for gold here after we just only tapped below the previous swing low before completely reversing after the FOMC statement. In fact, the following day on the Thursday is where gold really started to catch a bid, but on Friday is where we have seen this breakout significantly higher. So again, well done to all of you that have capitalized on this breakout. So as we head into next week for gold, what can we expect? Well, we have seen hedge funds and money managers, they've increased their net long positions in gold in the latest week. We also have, from a cyclical point of view, typically we do see some more upward movement here for gold as we go into the final week of September. Just bear in mind that by the end of next week, it's going to be the end of the quarter. In fact, Monday, the 31st of September will be the final day of the quarter. And when gold has been such a strong performer as it has over the last 3 months, we're bound to see some profit taking either at the end of next week or on the very last trading day of the month on the 31st of September on the Monday. So just look out for that a little bit later on in the week. I am looking for a bit more upside here on gold, although we could still continue to move a bit range bound. So we have seen quite a range bound market recently with gold, but there's been some great opportunities to buy on these sell-offs. So as we go into next week, I want to see whether we can climb above these highs here from Thursday and Friday. Well, Friday in particular, see if we can get a break above $1,517 per ounce at the beginning of next week. Now, as I mentioned last week, that many of you commented on with the previous week ahead report, we were expecting a gap on the open for gold. And in fact, we saw a huge gap on the open for oil, which we also discussed. And we did see the biggest move, of course, since 1991 for oil prices, with a very significant gap, which I'll show you shortly on the oil charts. But gold, we saw the gap. We took the opportunity last weekend on the gap in the open to bank some profits with gold and then bought back in lower yet again. But what I would would be watching out for too as we go into next week is silver, of course, and platinum too. So all three of these metals have been consolidating in the latest week. Usually silver and platinum, they do tend to correct over the month of September, but pick up momentum at the end of the month and into October. And if we have a look, in fact, even on platinum on the daily chart here, we're starting to see some signs of reversal, but both platinum and silver, they really need to break out of these current downward trending channels. You've got certainly a pennant formation, indecision in the market right now. I want to see if we can get a resolution on this going into next week on both silver and also platinum. Gold has in fact already started to break out of the bull flag that we mentioned previously that we were looking at last weekend, whereas many traders at the moment, they're looking at a head and shoulders pattern on gold, but we were looking for a bull flag, a breakout. We've actually had that significant breakout on Friday, and in essence we do have further clean air here to break out higher if we can just get a slightly higher breakout to the upside and get back above Friday's highs here as we go into next week. We have just a little bit more resistance to contend with gold here. We do want to see how it opens over the Sunday through to Monday to see if we are able to break back above Friday's highs, in which case if we can, then we've got clean air to start making a run up back towards the upper channels here as well, which is what we look out for going into next week on gold. We're in a good position here with gold going into next week where we have three positions which are well in profit with those trades protected, and we'll see if we do get more upside or not as we go into the beginning of next week. You can see we may encounter a bit of resistance now between around 1,516 up to around 1,528. If we break above those levels, then we're going to start making the move back towards the recent swing highs here as well. So we're definitely keeping a very close eye on gold as we head into next week with our three open positions that we've got running at the moment. Then moving over to crude oil. So crude oil, we essentially shorted this at the beginning of last week. We capitalized on this breakdown in price. We saw a rollover and started to move back towards that filling of the gap. We've actually closed out of that trade now, banked profits ahead of the weekend because we do not want to be subject to potential gapping that could occur again over this weekend. Potentially if we were to see a gap higher here, we don't want to be on the wrong side of that, but we've capitalized on this move lower as we continue to see oil roll over and start to give back some of the gains here. If you have a look at the overall open that we had here, certainly from the lows to the highs, we've had over about 800 to 900 point gap on the open there from Sunday through to Monday, which of course the biggest move that we've seen again since 1991, and 19% move in one day for WTI crude oil. As we head into next week, first of all, I want to see whether we will gap on the open or not. If we just were to open at a very similar price to where we are at the moment, we could still potentially start to drift lower to fill that previous level that hasn't been filled yet. The close essentially from the previous Friday, we could still come back down towards that level, which is at $55 per barrel for WTI crude oil. If you have a look at the price structure right now, all we really need to do here will be to roll over, break back below Friday's lows, Thursday and Wednesday. We start then to make a rotation back towards approximately the 56 then 55 level below that to fill that gap. That's if we do roll over and break below those levels. Of course, we've now consolidated for 3 days. If we start to break out higher again, back above the last 3 days of highs, then we can start making a move back towards that $60 per barrel level, or we may continue to consolidate here in the early part of next week. Now, hedge funds and money managers, they have increased their net long positions in oil in the latest week. Normally, the final week of September does tend to be more consolidative for oil prices, so we may still just churn sideways here, given that we had such large volatility. But overall, I want to see if we can roll over slightly lower here and see if we will get a breakdown and filling that gap that was created previously for WTI crude oil. Then, of course, if we were to break down towards those levels, we would look for opportunities to then very simply, as well as potentially shorting that move, we would then look at buying opportunities at the lower end of the range again. October tends to be a supportive month for oil prices as well. Of course, we've got unusual volatility at the moment, given the big breakout that we've seen the previous weekend and the gap on the open. I hope some of you did manage to capitalize. Either if you capitalized on the long side, very well done. That was a huge windfall. But if you've capitalized on the sell short side as well, as we have been selling in the latest week, well done to you as well. We mentioned that on our oil asset of the day, where there were opportunities to take advantage of that sell short if we were to start seeing the price action break down back towards the lower end of that channel, in line with supply coming back online from Saudi Arabia, quicker than the market was expecting. So with that, that has been the week ahead commodity report. I wish you good trading. And of course, if you'd like to learn a research driven approach to the market, where you're not only looking at technical analysis, but you are also taking into account cycles, trade flow, market sentiment, you're aware of what the smart money is doing in the market versus the retail trader. You're also looking at seasonalities, geopolitics, combining that with fundamentals, and then marrying that up with technicals to generate a trade idea. There is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you join a community of successful traders, and you have access to our exclusive live trading room webinars. You also have real-time trade alerts, real-time trading research and market insights, access to our private members academy membership site, and access to support and one-to-one mentoring. For more information, please visit www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.